Hey there everybody, Jason Stapleton here for a training lesson here on YouTube. Now this video is going out exclusively on YouTube, and so it's going to be one of the rare times that I will ever do a full-on training on YouTube. Most of that happens through Trade Empowered or through one of the live events that we might hold. But I wanted to do this video for you today because I know so much of what I do is Fibonacci related. I want to show you guys and give you guys really the secret to trading Fibonacci. So now rather than spend about 20 minutes leading up to it, kind of enticing you, I thought I would just give you the secret right up front, and then we would spend the next few minutes basically going over a couple of charts and talking a little bit about Fibonacci and how you actually apply it on a daily basis. So here it goes. The secret to trading Fibonacci is understanding that Fibonacci is a tool, that it's not mystical, that it's not magic, but that when employed properly in conjunction with a couple of other things that I'm going to show you, it's going to present you some enormously profitable, high reward, low risk trading opportunities that you can take advantage of literally every day. And we're going to look at this both from an investor standpoint and also from a trader standpoint. So now most of you who know me know I deal largely in currencies. We're going to look at some currencies, and then I'm also going to look at Google here as well, so you guys get a nice round view on how you use this both for investing and as well looking at it for trading as well. So let's go ahead and jump into the chart here. And what I want to show you first of all, I'm just going to drag this up. See, here's the problem with Fibonacci that people run into is they take a look at this and they take a look at their, well, let's just do it like this. They take a look at their Fibonacci levels and the market goes up, boom, and then it starts to pull back, and they're looking for a chance to hop on the trend as the trend starts to go a little bit higher, and so they grab their Fibonacci tool because they've been told Fibonacci is awesome and it works great, and they draw in their Fibonacci tool here, boom, and they're looking at that 382, and they remember somewhere somebody was telling them about 382 and how important that Fibonacci level was, and so as the market pulls back into that Fibonacci level, they decide, I'm going to buy it, boom, and they end up entering long in the market right there. The problem is that the market doesn't go there. It doesn't stop. It just continues lower and lower and lower and lower until finally the pain becomes so much that the trader says, all right, well, I can't deal with this anymore, so I'm going to go ahead and exit my position. So they end up exiting the position right there. Well, sure enough, no sooner did they exit the position, but the market runs right down into the 618 retracement and then rallies off of that onto new structure highs, and they kick themselves and they curse themselves and they say, why? And so then they say, well, next time I'm not messing around with that 382 anymore. Next time I'm going to do the 618 and I'm going to beat this thing every single time, because obviously the 382 is not where it needs to be. That is not the reversal one. It's got to be that 618. And you know what? I found a couple of guys after I started looking at it that told me how dumb I was and how, yeah, the 618's the one. And so then he ends up looking at this, and he goes the next time, and he watches that market pull back, and he's getting excited because he sees it come down into the 382, and he knows the 382 is not the one. It's the 618. That's the moneymaker. And instead of coming down, the market comes down right into roughly the 50% retracement, and boom, it rallies off of it. And then he says, all right, well, screw this. I know it's not the 382, the 618. Sometimes it doesn't go all the way down there, so I'm going to split the difference. I'm going to go ahead and I'm going to grab my 50% retracement, and I'm going to use the 50% because I hear the guys on CNBC talking about that 50% retracement, and I want to make sure that I'm getting in when that market has a 50% retracement from the last leg of the move. So again, same scenario, market comes down, boom, 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 boom. We hit the 50% retracement. Market gives a little rally. And a guy thinks, this is awesome. This is the best thing that's ever happened. I can't believe it. This is the greatest thing. I can't believe I finally found the answer. I finally figured out how to use Fibonacci levels, and then just takes a nosedive. And it doesn't take very many of those before a guy starts to say, well, Fibonacci's crap. Fibonacci doesn't work. All it is just a bunch of lines, and they'll go out and they'll find 50 people online who will tell them what a joke Fibonacci trading is and how it's been proven to not work, and all kinds of garbage about Fibonacci. And most of it stems from the fact that the people who are giving advice online are idiots. I mean, there's just no other way around it. Most of them don't have any idea what they're doing. And what we're going to talk about today is a couple of different ways to use Fibonacci that will allow you to have those high reward, low risk opportunities. Because in reality, if all you're using is a Fibonacci level, it's going to be largely worthless to you because you're not employing some of the most important aspects of trading, structure, and overbought and oversold conditions. If we apply those two and use Fibonacci as a pinpoint, as a marker for where we want to be looking for these transitions to occur, now all of a sudden we've got something that we can really use. So let's go ahead and delete this, and let's go down to the actual Google chart, and let's start looking at the last move. Now, the very first thing that I will teach traders when we go into this and we start talking about Fibonacci is we start out learning about structure. And I'll say, look left, structure leaves clues. Look left, structure leaves clues. So let's take a look at what's happened here over this last leg. And I'm just going to go ahead and pull this back here so we can see it a little bit better. So we had, again, you can see the market was trending downward here. Okay, we've been making new structure lows. The market had been moving down. We moved back down into a support level. Then the market broke to the upside. Very hard and sharp breakout to the upside. This is Google now on a daily chart. So this would be for your investor type. So those of you guys who are trying to figure out, well, how do I maximize my position in Google? This is one of those really good trades that just, Google tends to be a pretty safe buy on the pullbacks and has for quite a long time. So let's see what we can do here. So then the market pulls back, boom, and we find a low point. Where did we come to? Look left, structure leaves clues. Look left, previous structure support now becomes, or previous structure resistance, now becomes support. And then the market rallies again, and we break the previous structure level right here. Okay? Previous structure has been broken, we close up, then we pull back. Where do we pull back into? Look left, structure leaves clues. Boom. Previous structure resistance now becomes support. Then we get a rally. Boom. Market comes up. New structure high. Then we pull back. Where do we pull back down into? Look left, structure leaves clues. Didn't quite make it back down into that support level, but we're basically coming right back down into that particular zone. And then the market comes back up, we retest the highs, and now we've come back down again to retest the lows. So we're respecting structure on the high side and on the low side. Now, this is the big question that traders start to ask, is they start to say, well, okay, Jason, after the initial breakout, after the market confirms that it's going where it wants to go, and I get that pullback, let's say I use that technique and I say, all right, the market's broken up a new structure, it's pulled back into previous structure resistance that now becomes support, and I decide I'm going to buy there. How do I decide where I should be taking my profits off? Well, this is the beautiful thing about Fibonacci, and it's one of the nice things that you can use Fibonacci for in your everyday trading. I'm going to take my Fibonacci extension, and it doesn't matter whether you bought the retracement here, whether you bought the breakout, whether you just bought because, hey, it's time to add a little bit to your portfolio. We're going to look for, where do I maximize my exit? Fibonacci extension, swing low to swing high, and I'm looking at the 127 extension. At the 127 extension, look at what happens to the RSI. This is the relative strength index on the chart. 127 extension, we come in, market goes overbought, and then we get a retracement. You just zoom in here so we can see this a little bit better. I'm going to fatten up my bars if I can remember how to do that. There we go. Market rallies up to the 127 extension, and then we get a retracement. Now, where do we retrace back down into? We already looked at that. We already looked at previous structure resistance, now becomes support. But let's grab our Fibonacci level. Swing low to swing high. And look at where we come right down into that 382 retracement. So what we end up doing here, guys, is we're building a case for entry. You'll hear me say that again and again and again. Look left, structure leaves clues, and build a case for entry. So we're justifying putting our money in the market or taking our money out of the market based on what we're seeing here on the chart. So as this market pulls back down in here to the 382, we're now at structure, at a 382 retracement, and we don't quite go oversold here. Not quite, but we're getting close. And if you're using a 30-70, you're definitely oversold there. So the market comes back down in, boom, and now we have a buying opportunity. Gives us a chance to buy. Now what happens? Now we're long again, right? We had a chance to sell at the 127 extension when the market went overbought, and we had a chance to buy it back up at previous structure resistance that now becomes support. Now what do? Let's take our next leg of the move. Now we're going to look at this leg, okay? Because now we just bottom up here. Now we're looking. Fibonacci extension, swing low to swing high, and back down in. And look at what happens. 127 extension. Between the 127 and the 1414, we get overbought condition again, don't we? Market goes overbought at the 127 extension, gives us an opportunity to sell right there. Then what happens? Let me fatten up my stuff here so you can see it. Okay. So we've just come off this pullback where we bottom up. Then the market rallied again. Where do we pull back to? Fibonacci retracement, swing low to swing high, right down into the 382. And then the market rallies back up and we get a little bit of consolidation in here. And now the market's back down against basically previous structure support. So my question to you is, if you're an investor and you're trying to figure out when to enter and when to exit a market, using Fibonacci can be a powerful, powerful tool in conjunction with talking about overbought and oversold conditions, and also looking at structure for entries and exits. And this is in a trending market, so we're not talking about any type of counter trend trading or anything like that. We're just using structure in conjunction with fibs, and then we're adding in a relative strength index to determine, really where the market is going overbought and oversold, or where we are likely to see that type of reversal. Now, let's drop down to Canada. Let's go to Canada yen. We'll switch over to the Forex pairs for all you guys who follow me who are in Forex. Now, you could do this with any chart, but I'm just going to use this one because, it's currencies, and we're going to jump down to a 4-hour. So, again, we're on a swing, kind of a swing trading time frame. We do a lot of this on 5-minute and 15-minute charts for day traders, but, stick with me here on this. So, let's look at the most recent leg of the move here. All right, we came up. Then we came down, then we had a retracement, and then we pressed back down again. Where did we press back down into? Look left, structure leaves clues, previous structure support. Now, we also had a nice resistance level in here as well. Let me just draw this in again. We take a look at this. Market comes down, then we rally. Then we press down again. Then we pull back. So market came down in and pressed down nicely into this previous structure support. Now, question. Based on this leg of the move, where did the market complete? Fibonacci extension, swing high to swing low, back down in. Look at how beautiful that 127 extension runs right into previous structure support. If we bring our Fibonacci retracement in, swing high to swing low, you're going to see, sure enough, right up into that 382. 382 at previous structure support would have given you a selling opportunity here. Market breaks structure, we rally back up, have opportunity to sell down into the 127 extension, where you have an opportunity to cover your position. Now we rally back up, boom, previous structure support. Should become resistance. We take a look at it. Boom. That would have been about a 50% retracement. Still okay. 50% retracement at previous structure support. But in this case, the market didn't hold that line. It ended up rallying up and breaking structure to the upside. And now we don't have a trend anymore. And this is what's really important. This is what I want you to pay attention to, because now the market's not trending anymore. Now we've had a break of that cycle, and what normally will happen is traders will look at this and they'll get freaked out and they won't know what to do. And I'll say, oh well, this is odd. I didn't see this when Jason ran through the training. He didn't show me any like this. He didn't show me any where the market didn't complete. He just showed me a bunch of winners. But in this case, the market doesn't do that. It breaks structure and it violates previous structure resistance. This very nice resistance line, the market popped above that. This is when Fibonacci and ratio analysis really become very, very, very powerful. Because now what you can end up doing, and this is something that my traders know all too well, now you end up looking for the pattern. And you start looking for the selling opportunity in the pattern. These are very high probability trading opportunities. This is that cipher pattern that we talk about all the time, 80% accurate. We come into that 786 retracement, we end up selling there and watching. 80% of the time, we're going to see that market move and hit at least one of our targets. And these patterns are based on nothing more than the same type of Fibonacci levels that I was talking about in Google, and then looking at the 127 extensions here on Canada yen. Now here's the nice thing. Markets are in trend about 30% of the time. They're in consolidation the other 70% of the time. That means that if you can learn to use Fibonacci and read structure, what you can do is you can be making money during the 70% of the time that the market is in consolidation using extremely high probability pattern formations that exist on every market in every time frame that we've ever tested. They're all over. I can literally pull up our syndicate feed, which is one of the subscriptions that we have, where we actually post these trades out to everybody, and I can show you, just over the course of one day, 1, 2, 3, 4, 5, 6, 7 different trading opportunities on those 5 and 15-minute charts. And they exist on the 60-minute and the 4-hour and the daily and the weekly. They're all over the place. And guys, this is what's so powerful, but you have to remember, you have to understand that Fibonacci is a tool for your toolbox. And like anything else, if you're looking for the quick fix, then you need to go and you need to buy a signal service and you need to hope and pray that that guy knows what he's doing and he's going to give you good advice and good counsel when he's sending you those trades. But you're never going to be free. You're never truly going to be able to walk into the market and own your own accounts and own your own trading. I don't care whether the guy ends up making you $1 million. As soon as he goes away, as soon as that guy dies, you're right back to square one. Unless you learn the skill. And if you'll take the time to sit down and follow what we do and follow this, Fibonacci is a wonderfully powerful tool that can give you incredible insights into what the market is doing and what it intends to do. And so as you're going out and as you're studying more about Fibonacci and you start to learn it, remember, apply it inside of the tool set. And then what we talk about is we talk about building a formula. So we say, let's take a set of rules, a set of conditions. Let's test that in the market and let's see if that's profitable or not. And if it is profitable, then let's trade it. And if it's not profitable, then let's make some adjustments to it and test again. Because the only way that we create an edge in the market is to find something that if we do it again and again and again and again and again inside the market, we're going to get a specific response. And for example, the cipher pattern here is a great example of that. If we trade this over and over and over and over again, we've been trading this, we've done several years of back testing on this, and we've been trading it for over a year now with our clients, live in the market every single day. The numbers consistently hold true about 80% of the time. When this particular pattern formation sets up, we run into that 786. If we sell there, we're going to make money 80% of the time. And so, I'll leave you with this. As you go out, Start hunting for these patterns. Start looking for this. This stuff is free online. You can go find it if you want to. We have training courses that will teach you this stuff, and we will sit down and work with you to make sure that you understand the material. But bottom line is that I really want you to take, what I really want you to take away from this is I want you to go out and learn this stuff. I want you to really apply yourself and learn a skill, because it's the only way that you're ever going to be free. It's the only way that you're ever going to achieve what you really want. Now, we all get really fed up and tired, and we just want to walk. We just want somebody else to give us the answer. We just want to turn it over to somebody else. But when you do that, understand that all you've done is trade one master for another. You've traded your current job, your current job, your current business that you run, and you've traded it for another one, because you're not truly free. You will always be dependent on someone else. And what we want to do at Trade Empowered is we want to free people of that dependency. We want to free them of that sense of, overbearing control that someone else or some other thing has on their life, so that they can sit back and say, I don't care what happens. I don't care what happens. I don't care what they do in the Congress. I don't care what they do, the politicians do. I don't care what the tax man does. I don't care what happens with unemployment or what my employer might be doing and whether he's going to have layoffs and whether I'm going to have the health care or any of that garbage. Because we know that we're going to have a way to make money no matter what. And that is the kind of liberation, that's the kind of freedom that we're trying to provide. So anyway, that's a little bit on Fibonacci, the secret of. Thank you so much for listening. If you've got questions, comments, concerns, please let me know. We could look at 50 more charts like this, but I just wanted to give you a brief overview and a little taste. So leave me your comments, come by Trade Empowered, and of course, if you like this video, please hit the like and share button. Would really, really appreciate that. Thanks so much. Bye.